Hello, everyone, and welcome to the Open Banking Summit. We have an incredibly exciting panel for you guys today, and an incredibly international panel and international audience. Open banking is a topic that we've obviously dealt with extensively. It's one of the most important policy items in financial services today. So very excited for this session. Just before we get started, a huge thank you to our partner, Pngme, for helping us organize this session. You'll be hearing a lot about Pngme and from Pngme during this next hour. And a bit about the Open Banking Summit. We host these kinds of sessions every single month. If you're interested in attending other ones, please go to lendersevents.com and please check it out. We'd love to have you back. We'd love to have you participating. So thank you in advance. And with that, I will hand things off to your moderator, Richard, to take things away. Thank you.
Thanks, Tal. Hello and welcome. Terribly excited to be here and have all these great panelists. I'll have each of our distinguished panelists introduce themselves in just a second and take a minute to do so. I'll lead off. I'm Richard Pryor, CEO of the Financial Data and Technology Association. FData is a not-for-profit trade association for businesses that use or aspire to use open finance in their business models. So our members provide innovative financial applications and services to empower customers to make better decisions, to take fuller control of their financial lives. Currently leading the campaign for open finance in Europe, North America, South America, Australasia, and Asia. We work with government, regulatory authorities, and the financial services industry in our mission to enshrine the rights of the customer to be able to safely share their financial data with providers of their choosing. Lesley-Ann, why don't you pick up?
Sure, Richard. I'm Lesley-Ann Vaughan, and I'm a consultant at CGAP. CGAP are an NGO that work in emerging markets and financial inclusion. They've been running for a long time, 25 years plus, but in the last 15 years, I've got really into kind of digital services. And that's from the M-Pesa story kind of emerging out of Kenya back in 2007, I think it launched. I was part of the original M-Pesa team back then. In the last 3-4 years, we've really been looking at CGAP at open APIs and should DFS providers be trying to open APIs, and what would the benefits be for poor people? So we've got a program of work with 5 different parties kind of globally, and we've been walking the journey with them, understanding what it takes to think about APIs.
Great. Brendan, why don't you go up?
Good morning and good afternoon, whichever time zone you're in. My name is Brendan Playford. I'm the CEO of Pngme, and really grateful to have everyone on the call today. Thank you, Richard. Excited to be here with Lesley-Ann and DJ in Lagos as well. At Pngme, we're building an open data platform that's being delivered through a unified API. So about 2 years ago, we started the company with a vision to give more people access to finance and really kind of solving a problem for the flow of capital into many underserved and underrepresented markets when it comes to different financial products. And as we were building a solution to this kind of problem, we realized that it wasn't necessarily that capital couldn't flow through payment rails. It wasn't necessarily because there wasn't identity solutions. It was generally a lack of intelligence and understanding of the user. And that came from a position of not being able to access data. And that means accessing data from a number of places, whether it be your mobile money account, whether it be your bank account, whether it be your agent transactions where you're doing cash in, cash out. So in these markets, data is very fragmented, unlike Europe, where there are open banking policies and it's being embraced by banks. Many institutions in emerging markets have taken this as, I would say, a quasi-threat to their business models and have kept their data very, very locked in. So what our platform allows is it allows end users to authenticate and give access to their own data in a way that gives them sort of sovereignty over their own data. They can then take that data to a number of our kind of partners or customers, share that with the financial institution, and then get benefit from products. So we see open banking or open data as a movement to ownership for the individual, and allowing more choice and freedom for the end user to get products that hopefully help them build wealth, build opportunity, and actually open up choice.
Thanks, Brandon. And Adedej?
Good day, everyone. I'm a technology investor from Lagos, Nigeria, and a trustee of the Open Bank in Nigeria. Open Bank in Nigeria is a non-profit driving the advocacy for open APIs within the Nigerian financial industry. Unlike other industries, jurisdictions where you have the government driving open APIs, in Nigeria is private sector driven. And this is necessary because we believe that we can actually work with the government to achieve instead of waiting for this thing to happen. We started about 3 years ago, and then we have a very impressive list of members from Nigeria and outside Nigeria, including Pngme as well. And our major focus is on financial inclusion. Reason being that in Nigeria, for example, like 50% of adults don't have access to financial services. And we honestly believe that financial services should be equal to fundamental human rights, because in the world where we live in, if you don't have access, you may not be able to do a lot of things to make your life worthwhile. And this is what we've been doing for the past 3 years. We made significant progress, and we know maybe in the next, within 12 months, we should have open banking kickoff officially in Nigeria.
Excellent, thank you, thank you. So we've got a terrific agenda today, and I'm going to dive right into it. I'm going to have a panelist lead off and then invite everybody else to dive in with their expertise. And if you feel that the question is better served by another panelist, please feel free to pass that question to them. So let me start off with Brendan. Is there confusion around the definition of open banking and what the technology offers institutions and customers? So for example, open API versus screen scraping, reverse engineering of APIs.
Yeah, so it's really interesting. I think that PSD2, which is the kind of European Payments Directive, really framed open banking as a method in which banks could open up their APIs to sort of embrace the wave of fintechs that are coming through Europe, whether it be Revolut, Chime in the US, or many of the other platforms that have kind of become these neobanks. How can banks continue to harness their infrastructure, yet allow other services to be built on top of them? And I think there's kind of two ways to look at it, and maybe Lesley-Ann, I think, can kind of tee off of what I'm saying here as a better kind of dive into it. But from my perspective, open banking is this assumption that the bank is going to make their data available to the market. However, there's been a lot of like API wrappers or platforms built around the bank's existing infrastructure. For example, Plaid, Flinks, whether it be Teller in San Francisco, some of the emerging Plaid-like platforms for Africa like Okra or Mono out of Nigeria, that are relying on the user to actually kind of break out their data and bring it into an open banking-like environment. So open banking is this sort of movement of opening up data and functionality to third parties. And I think there's sometimes confusion over like how that opening up is being made and who is the provider. Is it the bank doing it, or is it a third-party service provider? So from my perspective, you know, there's two approaches. You're not always going to have a bank open their APIs, but that doesn't mean there's no open banking.
Great, thanks. Who else has a thought regarding that?
So for me, I think open banking the definition is not to cast in stone at this time, because sometimes it kind of ranges from maybe an approach to the technology itself. But one thing that is pretty clear is that for open banking to be really open, it can be a proprietary standard. So I don't believe a single company or a bank can define a set of APIs as open banking. There has to be that collaborative approach to it. It has to be what the industry actually agrees, because literally everybody has APIs right now. But if it's different from the next bank, I don't think it's open. Open means it belongs to everyone and no one in particular.
So I'd resonate some of that. another CGAP team have been working in parallel with our team in generally looking at the state of the industry of open banking. They studied where it is happening, and they're saying a mix of private sector and public sector and what it means in terms of even services available. So does it have data? Does it have payments? Is it aggregated data? Is it customer KYC data? There's all kinds of different variants. And actually that publication is going to become public very soon. There was actually a webinar about it yesterday. If anyone is interested afterwards, I can probably send a YouTube link to the webinar and to the content. In our DFSB project, we were very much private sector working. We were focused in on helping the DFSB think about their strategy and their journeys. And one of the big things we talked about at the start was an API is an API. And there's a plethora of private to partner to open. And what's the difference? You're kind of moving on a spectrum. And towards the open end of it, it's about self-service and about democracy of access and not so many of the big deals, the kind of more of the Twilio style Lego brick approach as opposed to the get in a room, do deals, make the jigsaw pieces.
Yeah, absolutely. Great points. I mean, to me, I think one of the important things has been that the open part of open banking or open finance really refers to the market. I mean, the market should be open. And also just the understanding that open banking is an enabling technology and doesn't in itself contain the proposition, but allows the innovative products and propositions to be brought to the market.
You need the scheme and you need the strategy.
Yeah, exactly. Super. So Lesley-Ann, let me stay with you just for a second. So for the next question, how do the definitions or capabilities of an open API change in the context of a developing market?
Well, actually, that's been a big question on our projects. Are APIs right for our business? What our providers were asking. And it's down to is there even demand for it? Never mind, is there, sorry, I've got a phone going in the background. Is there even demand from it from the ecosystem is going on in our world? And what we're seeing demand for is the PISP style model far more than the data model. And part of that is actually, when you look at a financial inclusion customer, they don't have their data in one place, and actually it's about alternative data quite a lot of the time. And MFI's data is not a complete picture of what that customer is doing in their financial life, because they've got all kinds of informal mechanisms. They're very cash driven, and the data actually that's probably most digitized is their phone records. So actually back when we invented Mshwari, the innovation behind it was actually looking at your phone records as an alternative source of your propensity to pay. And those are the kind of conversations that we're seeing in an African and emerging markets context, where actually is the valuable data and how do you bring it together in a way that is useful to do some valuable service design.
Terrific.
Yeah, I think I might just add sort of one comment to that as well. And Adedej can probably speak more broadly to this, but it's something that came up with us over the last sort of 2 years of building the company, was really focusing on what data we should try and bring to an open API-like infrastructure and what is contextually important for the market you're operating in. And if you look at the US and European markets, the majority of people are banked. You generally have a bank account from the time you graduate from university or college at 18 or 16 when you get that bank account. Generally, that's been for life. The fintechs and the neobanks are disrupting that sort of lifetime of being with one bank a little bit. But you can often say that transactional data is held there. You can often say that you've been building some sort of credit history through reporting from your utility provider, through the bank, through a credit card, something like that. So from a very early age, you start building this structured picture of your holistic sort of financial profile that's held with these trusted institutions, supposedly, that give custody over them. And then when you need to go and get something, they grant permission to whomever to that sort of data and that judgment. Now, when you're looking at more of these other markets where at the moment there's around 2.5 billion people that are categorically, we call them thin file. So these are people that don't have that, in my case, 14 years of data built up in a trusted repository. You have to, as Lesley-Ann was saying, rely on these alternative data sets. And you may see a transfer of sort of open banking in other countries where they might be solving a problem for extracting, whether it be identity data or transaction information from a bank account. However, you may only be serving a very, very small subset of the market. For example, in Nigeria, only around 1%, I think, and Adedej, correct me if I'm wrong with that, that's the number I use, have mobile or internet-enabled accounts that allow for screen scraping. Whereas there's, I think it's around 40 million mobile money accounts that are a mix of smartphones and feature phones. So if you're purely going for sort of what has been I'm going to call it legacy open banking, even though it's been around for 6 years, where you're extracting bank data vis-a-vis Plaid, you're missing a huge amount of data coverage that's required in these markets. And that's whether it be alternative data, mobile money transactions, and how do you take this extremely fragmented marketplace that has actually blossomed on top of mobile money and given a rise to a load of services. However, it's all siloed. So that's sort of, I think, the core difference for me, and is how do you take that fragmented picture and boil it down into a holistic profile that is then owned by the user?
And I think also includes the reality that people vouch for people. You have credit lines with your local merchant. You have propensity to pay, but it's not digitized. And that's where I see a lot of innovation starting to happen around how might we look at these alternative sources of data way beyond telco data and your banking history to go, actually, are you trustworthy?
So if I could add to that, using telco data is really critical, because in the developing countries, that is one thing everybody has access to. Unfortunately, at the same time, I know that the algorithms to do that are not really very mature or very open. As much as we drive open banking, I could still say the banks are a little bit more open than telcos. So I believe that some of these approach to open APIs, if we apply them to telcos as well, we may end up having more significant impact than just talking about open banking.
And I think telcos are talking about this, but obviously they're regulated separately. So there is a conversation to be had. Absolutely, everyone is thinking about how do we actually work together and do the right thing, with the customer protection in mind at the center.
Absolutely. So now some of the people have had to do with a lot of people that don't have access to maybe credit, and the rest of them may not be so sophisticated in the ways of data protection, privacy, understanding what they're trying to do. And so some of these salient facts have to be at the front burner to ensure that, look, in trying to open this for the bottom of the pyramid in code, we have to make sure we protect them. But I believe, like Lesley has talked about, is critical to bring in the telcos into this, and then the work will be a better place for everyone.
Yeah, excellent. And that segues neatly, Adedej, into our final question for this section of the agenda. So I'll lead off with you, if I may. So Adedej, will open banking truly benefit the unbanked, and how?
Okay, I think it would. Let me start from the Nigerian perspective, and then see how I can stretch that across Africa and in other developed nations. So what you see is that every country has banks, but banks today have certain ways of making money. They really find it very difficult to fit in financial inclusion into their business model. You will literally see the World Bank and other DFIs working with central banks to create financial inclusion. But we know that big banks will never do this, because the traditional banks make money for money at rest. You put money with them, they give out big loans. They don't understand having to do transactions and making money from billions and billions of transactions. Now, can we make them change? I doubt it, because I don't think they have it in their DNA. But on the other side, you have fintechs who understand how to make money when it seems money can be made. Now, these fintechs don't need to be banks, because the barrier to becoming a bank is significant. Now, with open APIs and open banking, fintechs can work in partnership with banks, where fintechs will go to places banks don't want to go. And with open APIs, they can open accounts for anyone in any bank, and they can see on that. So in Nigeria today, we're trying to do agency banking, and then you have agency banking trying to integrate with banks. Now,
I think that's key. What you've just said is actually, there's another use case that's happening more in an African context than is happening maybe in a European context in open banking, which is actually account opening.
Yeah, so that's one of the interesting conversations I have with people that look, open banking is a tool, but it solves different problems in different jurisdictions. The European problem is entirely different from the African problem. And the African problem, I will tell you, is more pressing than the European problem. Because when you have 50% or more in different countries not having access to financial services, especially for the vulnerable, for the women who sometimes work and hand over their money to husbands and male family members, with open banking and access to their own accounts, they could control their own finances and their own future. Now, just look at those opportunities. These women are also the ones that actually send kids to school, protect their families. So a technology as simple as this could have significant impact. Now, that is not talking about loans. That is just talking even about opening an account. The next thing is when we talk of financial inclusion, I always tell people, savings is not a financial inclusion product because you only save when you have enough. What people need is credit. And what Open API does, it makes data to be so available that you can use non-traditional means to do credit assessment. We don't all need to have credit reports. I could look at your phone records. I could look at your transactions, and I could build very smart algorithms around that to decide whether you are worth to get credit or not. A $100 credit could go a long way in transforming a family. And when I'm talking of family, I'm talking about mom, dad, and the kids. We don't need that. So open banking makes all these things simple, takes away the friction. That, I believe, is where I believe that it can have significant impact. If you come to Nigeria today, some of the challenges in bringing, when they set up the agency banking agenda, has been that those who got the license to be super agents have found it extremely difficult integrating with banks. Without integrating with banks, everybody's doing agency banking with cards. They are only dealing with existing bank customers who just find the nearest bank far away. What about the 50 million people who don't have access to financial services? Now, by creating a common API standard for account opening, you can remove that friction. Even if we're able to deal with 50% of that, 25 million extra people doing financial transactions, having access to loans, having access to all kind of financial products and tools, could mean a lot for everyone.
Yeah, and I know it's sort of coming up on time here. I'll just add one thing from my perspective, and I love what DJ's saying here in terms of getting that sort of door open into the actual financial ecosystem. I think going back to my point of sort of our ability to take for granted how we can build a financial profile just implicitly, I think open banking is going to bring that to many more people. So when people do step through that door that DJ's describing, when you get to the other side, you're kind of carrying forward a profile that you can then take anywhere. You're not sort of locked into one provider. So through your life cycle of sort of wealth growth, opportunity growth, you can then take that with you. I think that's a critical piece. I think early on getting it sort of at this open state is really valuable because as people move through, they can be accelerated by carrying their kind of profile with them, which really, really excites me.
And I think particularly in Nigeria, I mentioned in the comments something called BVN, Bank Verification Number. It's a massive program at a scheme and a regulator level that's kind of being pushed into a place where you've got the ability to move people around far more easily because of this identity scheme. And to make that part of the open banking mindset in Nigeria does make it a game changer potentially, because I think identity and money and data are all very, very linked.
So to quickly summarize before we move to the next section of the agenda, the simple answer is that unleashing the benefits of open finance, open banking for the underbanked or the underserved is essentially huge, put alongside the current infrastructure.
As long as we think about it from a service design perspective and the needs of the actual poor person on the ground. And I think sometimes we do lose our way in that, but there's some awesome stories that are potentially possible. Things like what happens if you're able to switch people to a cheaper provider, but then help them automatically save that kind of money? You see that happening in the UK, but it's not yet ready for that in the Nigerian context because people aren't able to switch providers for things as easily as they are in a UK context. There's all kinds of ideas that could come through from how do you actually help someone to scramble, protect, and aspire. And that does mean more than just access to credit. And I think that's when the combination of payments infrastructure plus data plus identity, we can do some awesome things in the world.
Yeah, I think to place the consumer at the center and then build out the services from there, I think is absolutely the way to proceed. Yeah, but much more to say on that, but unfortunately with the constraints of time, let me move us to our second kind of chunk in the agenda. So overall, the significance of open banking to financial institutions. So Lesley-Ann, if I may, let me start with you. So what kind of financial institutions should consider building an open API and why? And there's more. What business objectives should they be focusing on solving?
The way that we've been chatting with our providers, and actually the material that we've published along the way, we say three things. We say you have to focus on your strategic business priorities. Are you connecting what you're doing to your strategy? Because if you think this is just a tech project and you're done, it's not quite that simple if you're going to open your own APIs. And I think that's where I think Open Bank in Nigeria are doing a lot of things for the DFSPs in the country because they're able to kind of outsource some of the technology creation, I guess, and around some of this. But we also tell them if they're going to do it themselves, keep it simple. Start small, try things. Don't try to boil the ocean on your first foray into open APIs. And we also talk a lot about self-service. If you truly want to go open and you want to engage with the widest ecosystem, what does that mean in terms of your business processes and for onboarding of third parties to your APIs and your legal structures in your company and the way that you think about data protection and the way that you actually do business. So there's way more to this than just creating the API itself. And so we helped our partners think about these kind of things.
So if I may add to that, I think every financial company should do open APIs. Recently, as I planning on buying a bulb, Philip View, and he has APIs for it. You could control it from your smartphone. So the world is going from person to machine. And reality is that if you don't do that, let's even leave financial inclusion aside. If you don't do that, you are just going to be taken out of the fabric of what the modern world is going to be. Everything is driven by APIs now. So it's important that you, even from a business imperative point of view, you need to have APIs for everything. But like Lesley said, the best way to do this is to build it out gradually. You can't boil the ocean on the first try, but you just need to start. You need to start, you're going to make mistakes, you're going to get some things wrong, but you just have to do it because there are no alternatives. It reminds me of when the internet became pervasive and a lot of companies didn't think it was important to have a website. Now, the website is the business. I think the same thing is going to happen with APIs as well. But one of the pitfalls to dodge will be to look at data privacy and protection. So many of us rushing into APIs still don't have a good grasp of how to do this very, very well. And with PSD2 and also GDPR, they look like opposites. You have to be careful so that you don't get into trouble because there are real implications for messing with the customer data or customer privacy.
And that's actually, there's so many details to get into open APIs. That it's a business unit in your company. It's not a technology project only, and you've got to debate these questions internally, and you've got to figure out the way forwards. But the beauty of it today versus 4 years ago, and these things move fast in this industry, is that you've got examples to look at and to compare to and make decisions against. And that's where I think some of the CGAP work that's been happening, that's going to be published soon, will actually show you what different markets have done, and some private, some public, and the kind of decisions you need to be thinking about in terms of your route, because it's not just about compliance. In the UK, banks were told they had to. In Nigeria, it's entirely up to you whether you choose to join. And so therefore your decisions are very different across different countries.
I think.
Yeah. Oh, sorry, Richard.
So yeah, I very much agree, Lesley-Ann. So this is part of the work that FData is deeply involved with, which is sort of looking at the cross-fertilization and lessons learned between markets to ease the delivery with a market nuanced approach that is appropriate for that particular framework. But again, just keeping an eye on our time here, we touched, Adedej, you touched on the data privacy kind of component here of being sort of so important. So let me throw the next question to you, that data ownership and privacy tend to be a major hurdle when building an open API. What should institutions be wary of when starting that process?
Okay, thank you. I think in data ownership has always been contentious, right from the forerunners of open APIs. So banks will tell you that, oh, the data belongs to us. But then you ask yourself, no, the money in my account belongs to me. So if the money belongs to me, the data describing that money belongs to me as well. Then banks took a step forward, start treating it like as if we are organized. Oh, you don't know how to handle this. Now, that's good. But on the flip side, having too much power, not everybody is sophisticated enough to know how to handle these things. If not, all these clickbaits and phishing links on the internet shall disappear. A lot of us are still gullible in a way. We trust what we're seeing. So I believe that it's a very fine line to walk. We have got to evolve, but what we are evolving to is both very beautiful and very enabling and extremely dangerous as well. So I believe this kind of, from a regulatory and from just a regulatory point of view, I think regulators need to let people know and let people show companies, especially the competence that they understand what they're getting into. And I also think the burden should be more on the companies to educate their customers about how to handle their privacy and who they should grant access to. Because when these things get out of hand, it becomes, it can be very contentious. Because most people will tell you, I didn't know they were going to debit my account. I didn't know that they're going to come back and debit in 2 days' time. I didn't know they're going to use my data to do this. Those are some of the questions we need to answer. And the other part,
I think to add to that, I think it can be done stronger together. And
yes.
rather than everybody doing it alone, that's where payment schemes and data schemes really can actually invest together in kind of this kind of thinking. I think Brendan will point to that point as well, I'm sure.
So I wish we could actually think that way, but some of the challenges we're seeing, and Brandon can talk to that as well, is we don't actually collaborate enough. That's one of the challenges. For example, in Nigeria, we know that open banking is good. In Africa, hardly do you see anybody that doesn't like open banking, but let's come together and do this, then it becomes a problem. It's one of those things we need to deal with. And the last one I'm going to talk about has to do with the fact that there's a gray area that has to do with data, right? If I send money to Leslie, right, the transaction record knows that it's going to Leslie. Yeah, I own that part, but if I grant access to that, have I also kind of infringed on her privacy? If I give call records and it shows that I'm always calling Brenda, right? Have I also, how does that happen? My contact on my phone.
Interesting.
So those are some of the information, because I could give out the data willingly, right, without a problem, but do I have the permission to let Leslie know that people are going to see that send money to Brenda or to her? So those are some of the gray areas I believe that we have to people, because they're good to be put forward.
Yeah, I'd love to pick up on what both of you have been saying here. So like for me, I see a global paradigm shift in the ownership of data. For those of you that have or haven't seen Social Dilemma on Netflix, don't own Netflix stock, please go and watch it. There is a massive shift occurring across the world in terms of how data and people are monetized. And we're currently still seeing a paradigm, I think, with some of the mobile money operators. A couple of people alluded to this where, and DJ said this a moment ago, the bank will say, this is my data, or the mobile money operator will say, this is my data. However, it's the person's transaction history or information within that account. And there's definitely a conflict there. And I had a conversation with Lesley-Ann the other day where we were talking about what are the key things to try and safeguard against some of the things that DJ just said. Like if you're scraping certain data sources, you can use graph neural networks to essentially map out other people on the network and map out their transactions without them even giving you permission to their data. So you can use really advanced machine learning techniques to, in advance of the person giving you permission, build up these very complex data pictures. And for me, there is this big wrapper of regulation, and we're sort of touching upon this with GDPR, PSD2, and sort of this unity of approach kind of mentality. And I think it's two-sided. First of all, fintechs and startups come in, they disrupt by taking things, using the user to get those things. So Plaid disrupted the open banking market. Many fintechs are disrupting the same market in Africa by simply finding alternative, innovative ways of getting access to the data without the bank making open APIs. Now, in that world, there's then a governance layer and a responsibility of us as guardians of that user data to use it appropriately and not continue that same paradigm. So for me, there is this multi-layer approach. There is governance from a collective level, like collaborating with Open Bank of Nigeria to kind of create a think tank of like-minded companies that are all out for the interests of the end user and the consumer, building products centered around the user or the person. You've then got regulation that's an overarching collaboration. That's advocacy, that's influence, that's lobbying from these organizations. And then you have the technology itself, is how do you govern that technology and put safeguards in place where some of these things that you can do with machine learning and can potentially cross that line into sort of, you know, invasion of privacy, as a DJ sort of saying, how does that all come together? And I think it's a multi-channel approach, and it's a bit of everything. The disruption drives the need for regulation, but there has to be good governance from the guardians and the likes of us making this change. If we just want to abuse the data and make as much money from it as possible, which is the old business model, we can keep doing that, but we have to shift and change and try and think of new business models as well.
We're in a new world, and I think this public-private partnership is where the world is headed to, and this concept of a new governance model around data is exactly where we need to go, because technology actually can do far more for us to protect consumers than asking them a question, do you agree to give your data?
Because some don't have a choice. Like if you're in desperate need of a short-term loan and you're sitting there clicking agree terms, you're probably not even going to read them. You're just, the need is so much greater. Yeah.
Our conversation went to the lack of actual centralized ways to know anything, right? So we were talking about in Kenya, how you can literally borrow from one to pay off the other, and how that actually takes people into a really bad place from a financial inclusion perspective very quickly. And therefore we have to work together for consumer protection long term.
For sure.
I like the working together you about as well. Like I said, that's what we do in Nigeria. That's why Pngme is part of the open banking as well. And we have a few other names outside of Nigeria, because despite the fact most people are not working together, we still believe that working together is the only way possible. But not only are we working together, we are working with the regulators to make this thing happen. And we have to go using our own means, our own resources to come, because we know that this has to happen. There's no other way. It just has to happen.
Yeah. I think a major part of this is education of the policymakers, because I think there's a danger here of the regulation not being kind of forward thinking enough or flexible enough to actually keep pace with either the technological innovation or the ways in which the technology is enabling certain products or services. So I think education kind of across the board of those who are trying to construct the rules of policy and sort of legislation around this is a critical component in any region. I mean, be the UK, Canada, Australia, Nigeria. That's a big part of it, I think, for us. So let me move, if I may, Brendan. Are there any markets better positioned to take advantage of open banking, and why would that be?
So that's interesting. I'm going to kind of loop all the way back to sort of our previous kind of discussion about what data are you making available through open banking. If you're simply going down the kind of bank data route, then it is, I would say, a different approach. We as a company have taken a really very narrow approach, which is going after mobile-based alternative data and putting that into an open banking-like framework. So you encounter a similar experience to what you would with banking data, but you have mobile money data, you have mobile lending data, you have all of these different data sets you otherwise wouldn't normally find through your bank. Now, we still integrate bank data. So from my perspective, it is really market specific and kind of technology specific. For me personally, anywhere that has I don't see any regions globally that couldn't benefit from open banking anywhere, because of the choice and the way in which it encourages more competition and diversity of products for the end user. Mentioned briefly about business models. If you look at business models in many banks that Adedej mentioned, with open APIs, you can be more creative, bring on partners to offer sort of fintech, like insurtech products. You can look at different loans that are really customized and bespoke. So you have outside people taking on the risk of underwriting rather than it being something that's off, out of balance sheet scope for some of these banks that are just going to continue doing what they've done for years. So for me personally, any market is right for an open API. We should have a global network of open APIs. However, it comes down to what data are you putting in the API. Some are easier than others to get in there. And what coverage do you get? Like, the key thing here is your data coverage, that's identity coverage, and what other, variety of data points are valuable for specific use cases in those markets. Onboarding of customers, that's a KYC, kind of day zero understanding of your customer requirement. That also applies to things like remittances. When you're looking at AML KYC requirements for diaspora, if you're looking at sending money home, raising those limits on remittances can be challenging without that really clear picture of the user. You can get that from the bank. You don't have to do loads. You can do these other things that open up markets. So for me, any market.
Mm-hmm. Yeah, agreed.
So if it could, I think, like I said, open banking we help literally every single country, right? But I think in the developing world, it's going to have better impact than even in Europe, because look, the Europeans, the North America, most part of Asia, they're already well developed when it comes to financial services. Your cards work well, direct debit works well, everything works fine. But here in Africa, right, and part of maybe Latam, part of Asia, you have quite a long way. We have a long way to go. We still have about 1.7 billion people that are financially excluded. So this set of people need more help than anything else. That's number one. So, and then number two, when it comes to creation of business model, look, we've read the news of what happened today. You have Stripe coming into Nigeria. There's a more growth opportunities for companies as well. So even from a growth opportunity, there is more space to grow in places like Africa, where this kind of open banking creates entirely new business models. Now you see you're seeing how the growth in smartphones happening. You're seeing, even though in terms of individual smartphone may not be as expensive as what you have for a typical iPhone, but you're seeing smartphone growth in Africa very, very robust, because most people don't have smartphones. So those opportunities are there. And I see them going together: smartphone adoption, internet availability, and open banking. I think the three combinations can form something very explosive for everybody in a positive way.
I would caveat that with it's dependent on the use cases enabled by open banking and who has access.
Good point, good point. So let me move us to our final block here, which is on integration. So Adedej, if you were burdened with legacy infrastructure, is it worth building an open API now? And what could change in 6 months to a year?
So what I would say will be, what will happen if I don't do it?
Mm-hmm.
Right. So the truth is, globally right now, there's no global standard for open banking. So you see in the UK, open banking is based on the JSON format for ISO 20020. In Nigeria, we have a proprietary Nigerian-based standard. So there's no global standard. So sometimes you ask yourself, why should I do it now? But the truth is, those who start now, even if they have to change in the future, will have developed more flexibility and better understanding of what they are walking into. Unlike if you wait until getting there. Waiting to get there may mean that others who have gone ahead of you, you may never be able to catch up. It also means that if you're not careful, you could start making the mistakes others have made when the impact of those mistakes are minimal. You could make it on a bigger scale. I would say this thing happened in top technology companies that we all used to hear about before, because they didn't know that internet was going to be very important. They didn't know APIs were going to be very good. They didn't know that people would not care about using keyboards on their phones. Starting late, I would say that sometimes it's better to start and you discover you started too early than to start too late.
I would add to that I think you're absolutely right that it is something you have to take very seriously, but you've also got to take seriously how much work it is to do, and factor into your operational units what it takes, and think about your risk models, think about your contractual models. Don't think it's just a technology project.
No, I think approach actually.
Sorry, Adedej, back to you.
Okay. You mentioned something. Don't try to boil the ocean. So if I'm starting today, I don't think I'm going to roll out all the old features. I will start with something small, and then I'll tell myself, if I survive that, then I can incrementally build on it. And
I would say slice through the whole organization, but start small.
Yeah.
Go through a whole way through, get adoption with legal teams, with operational teams, with how you run onboarding and everything, because that will teach you far more than trying to boil the ocean. Definitely.
Absolutely.
Yeah, I think from my perspective as well, sort of having worked with a couple of mobile money operators in Nigeria, actually kind of implementing what I'd say is a user authenticated API, not open, but they allow a user on their network to give permission to share their data with our platform, under which we can't share it, but they can share it elsewhere. Yeah. One other pain point we've seen here as well is not just sort of getting business people on board, but is actual native infrastructure. So we're so used to just spinning up AWS servers or Google Cloud servers for these services. But when you look into many of these markets, infrastructure reliability can be varied. AWS is coming. Obviously, Azure has been in many countries for quite a while, but infrastructure is still. What's that? Sorry.
Not Africa. I mean, South Africa. Both AWS and Azure are in South Africa, and it leads to data sovereignty issues and all kinds of things.
Yeah.
In the regulatory space.
So I think both a huge opportunity there for people looking at that sort of side of things, but we do see even with BVN, BVN's got like an 88% uptime just from an infrastructure point of view.
Yeah, it's a big deal, and this was a big part of our whole kind of mobile money movement when I was working in telcos, creating mobile money back in 2007. Robustness was the main reason we succeeded, because we designed for network infrastructure to be a bit unstable with an asynchronous design pattern on purpose. And it saved us so many times. Yes. It saved us so many times, and trust from the consumers disappears if you don't think about these things.
Mm-hmm. Excellent. So we've got a little time now to address some of the questions that have been popping up from our audience. And Lesley-Ann, I've seen you've been awesome responding to these as we've been going. So
multitasker.
being the custodian of that. But I think certainly some here are definitely worth sharing with the broader panel and also for our broader audience. So we're going to kind of work backwards here so that it's still fresh in people's minds. So a question from Ankit Mishra, a question on data privacy. So how much do individual consumers actually care about their privacy, providing that they're getting great services? There's a lack of opportunity is forcing people's hands to sort of use those services, I think is the point.
I don't mind starting that, but Lesley-Ann, maybe you can dive more in based on our conversation the other day. I think that for many of us, like I remember a long time ago signing up for Gmail. I never read the terms and conditions, and I signed away my rights to all of my data to Google a very long time ago. I fear that the same thing is happening here in many instances. And one of our kind of big philosophical opinions, again, from a governance perspective in our organization is very much like being focused on giving ownership of data to the end user. But I think it's extremely conflicted. My gut sense is that it's the same that I went through when I needed email 15 years ago, that the actual choice is so limited in where you can access products that you don't have a choice. And unfortunately, we have to go through this transformation to bring in that sort of market efficiency. So from my perspective, I think it's very limited what the choice is, and would love to hear other people's views on that as well.
I think you're absolutely right. I mean, in an African context, in emerging markets, you might own a smartphone, but you're not smartphone literate. You are using SMSs, and you're using WhatsApp, and you're making calls, and you are using Facebook, and maybe a few of the other biggies that are free. And it gets even worse whenever your data is bundled so that those services are free and don't cost you your airtime. So totally, the reality is people like free stuff, and privacy, people have given it away. So in Kenya, you can see that they've given away to some of the loan providers full access to all of their data, and it's led even to some of these providers innovating by shaming you on WhatsApp to your friends if you don't repay your loan. CGAP did a little bit of research with customers, an experimentation program where they actually got involved in asking customers how much they value their privacy by actually offering them different products and actually seeing what people would choose. The results actually did show that people in, I think it was many in India, they chose the slightly more expensive product because it promised them a little bit more privacy. Now that might be cultural, but it's an interesting indicator of the future. Maybe is even in emerging markets that is the case. I would say watch this space. Things are changing even in emerging markets potentially.
So I think the issue of privacy is critical, but I also believe that it's easier to make the companies to walk the straight and narrow than to imagine everyone will understand what privacy is about.
But if it turns to de-risking, Adedej, if it turns to de-risking and you can't open your APIs, that's actually what we're dealing with today.
Yeah, so I understand, but so my challenge is like what Brenda talked about. Most people, I always assume most people will not read or may not be aware of what they're getting into. So
consent is not enough.
Instead of trying to get 200 million people to understand what privacy is, it's easier to make sure the 1 million companies do the right thing. And this is where we need regulators as well to ensure that fine prints are not in fine prints, because this is where things are hidden, which is to force people to make sure that what you are going to do with the data. Recently, I was trying to test a lending app, and I couldn't go past the signing page because it was asking for my contact, for my SMS, location, and the rest. I didn't care about the location. I didn't care so much about the phone, but I cared a whole lot more about my contact, not because of me, but because of the people who are on phones, because they weren't expecting me to hand over their details to somebody else. Because at that instance, I keep thinking, I don't own their phone numbers. It just happened to be on my phone. And I think that's some of the problems we need to, I believe, needs to be dealt with.
My colleague Michelle has actually put that paper into the chat window, by the way. Thank you, Michelle.
Yeah, and not to labour this point, but I think that for people on this call that are interested in this, it is down to being disruptors. And, you know, through technology, we've seen a multitude of business models being disrupted. And I think we are, well, not think, we are about to see the disruption of free products enabling, data monetization or the monetization of the individual leading to a product being free. And at the moment, there aren't a huge amount of choices, and it's up to some of us to create new business models that sort of disrupt the free paradigm that we're in right now, and the I'm the product paradigm. It's not going to change overnight. Like, we still use, like, the majority of us still uses Facebook and all these services for free. The world has to change as a whole, and I think we're about to see that shift happen. But it's for some of us to be good stewards and to create innovative business models. Like, this is driven by profit at the end of the day. It's driven by how much money can I make for my users for the benefit of my shareholders. We need to see, are there alternative business models that we can create where those business models are more in line with the goals and objectives of the people we're trying to help and the people we're trying to give services to. And some people may want to have free services, but then that doesn't kind of match with this like conflict of, do I have any choice if I can't pay for a service? Like, do I have to opt in because it's free? So it's a really complex topic, but I think it's up to us to try and shape the future.
Create a movement.
Yeah, exactly.
I think we have one going. Okay, so, and let me pull another question here that caught my eye. So, on what kind of financial institutions should consider building an open API? And we had a question come in to say that it's easy to form a use case or a value proposition for the fintechs, but banks are so heavily regulated.
In building it's two parts to the scissors, right? Usually the fintechs are the one consuming the open APIs to be able to serve the customers and do use cases, while banks, being repository of the financial information and the money itself, are the publishers. So in a way, everybody has to, I don't think the fintechs alone can solve the problem. They will be the last man, but I always think the banks will be, they're critical and they have to publish. If not, there is nothing for anybody to connect to.
I think there is a business case to be made. There are lots of reasons to open APIs for any corporate, not just a bank. There are reasons based on efficiency, first and foremost, that I've seen have worked in the business case. If you are planning to create integrations to multiple organizations, it's actually the right thing to do it via APIs these days, and to make it in a more open framework than an integration framework. But there are lots of reasons to open APIs. We published some material on the business case, thinking at CGAP for DFSPs in particular. And this is some thinking about the rationale for API opening in there, that I would point you to if you wanted to kind of dig in more deeply to how we think about the why.
I also think as well, it's about building an ecosystem. So with anything like this, especially APIs, we're talking a lot about collaboration. We're talking a lot about interconnectivity. Like, this interconnectedness is about building an
digital
ecosystem.
Economy.
Yeah, and unfortunately, if you're outside of that, you're kind of self-isolating in a silo again. So there's always going to be a place for these players if you create an ecosystem. The banks will play a role, the fintechs will play a role, the identity providers will play a role. I think what's really critical is identifying what your place and your part to play is in that ecosystem. Instead of thinking you're going to dominate the ecosystem, which has been the classic bank business model, which is, you know, we'll hold all the capital, we deploy it as we like, we are the guardians of this sort of asset. And we're moving to a collaborative, unified environment where the interests are spread and you're building an ecosystem of value. And that ecosystem of value actually accretes to every player if they're connected. So for me, there's many use cases that come out, and there's many other products that be kind of offered to incumbents that they've never been able to offer before. And it's about this kind of ecosystem and an uplift for everyone, I think, that comes out of this interconnectedness.
Yeah. And you aren't just opening APIs, you're creating a framework to consume APIs. And I'm guessing that most of the organizations we're talking to are thinking about innovation. The speed to innovate is de rigueur of the day, and APIs are part of speed, is market share.
And Lesley-Ann, you have the honor of about the last word as we've hit the top of the hour here. So it's a great pleasure to thank all of our very distinguished panelists for a great conversation around this. Much more to be had, but yeah, been a great pleasure. Any final thoughts for anybody?
Not from my side, just thank you everyone for turning up, really appreciate it. And pleasure speaking with the DJ as always, and Lesley-Ann as well. Richard, thank you for being a good host. Really appreciate the time. And Tal, thank you.
Thanks everybody as well. It's good to connect with the global audience to discuss about open APIs. I believe maybe in 5 years time when we look back, we're probably going to have fun just thinking how we survive without open APIs.
Yeah.
Echo what the guys have said, exactly that. Thank you so much for having us today. It's been fun to have a chat about things like these with peers.
All right, and thank you for everyone in attendance. That was a really exciting conversation. You know, these events are always incredibly interesting to host. So thank you for joining. We'll be sending around a recording for anyone that missed a little bit at the end. Also, I encourage you to reach out to these panelists over LinkedIn and submit questions that you know, didn't get answered during this hour. But with that, thank you very much and enjoy the rest of your days.
Thank you, everyone. Have a great day.
Bye-bye.
Thank you.
Thank you.